Want to know how you can escape from your daily grind, achieve financial freedom, and live that life of your dreams? Welcome to Charging Forward, hosted by Chris D. Roberts. Listen to entrepreneurs from different industries and niches as they share their current successes and the journeys that brought them to where they are right now. Be inspired, get wise, and grab some vital takeaways from the most amazing business owners of today. Only here on Charging Forward.
Hello everyone, Chris here, and today we're going to review investing in the Sterling Rhino Capital Equity Multiple CF Fund 1 versus investing directly in assets. So why would you invest in a fund versus directly investing in an asset like a multifamily apartment complex? I'll also cover briefly the difference between, like, say, a REIT, which you may have heard the term, real estate investment trust, or investing in mutual funds that hold real estate. So the difference between funds and direct assets is those are tangible assets. You can put your hands on those buildings. You own part of those buildings as a limited partner. Versus in a REIT or a mutual fund, it's like a stock. You don't have as many advantages as it relates to, say, depreciation. So those K1 statements. In some cases, if you have passive income from other assets that you own or other streams of income, you can sometimes take advantage of that depreciation. And even if you don't, eventually you can, in most cases, because you'll have passive cash flow at some point once you start investing. So that's pretty cool. But you don't get that benefit generally with REITs or mutual funds. So why would you invest in a fund versus directly into an asset? Well, some of the reasons would be you want to diversify. So you want to go into real estate investing and maybe you don't know much about it. You don't have as much experience as, say, an accredited investor. You don't have that high net worth. You don't have that high average income. And so you don't have access to as many of the deals. Well, in a fund like this, you can invest and you can get in for as little as $5,000. So you could test the waters a little bit. And you want to invest in a fund because it diversifies across different assets. So if you invest in a fund, then you're going to be investing in 4 to 6 assets. In this case, there's going to be 6 assets. So 6 apartment complex for one investment, which means you, as a limited partner investor, only have to sign one set of legal documents. And once you've reviewed the presentation, the webinars, the videos, the offering, then you'll go through and sign the legal documentation. Now, any presentations you see, any information in this podcast is not an actual official offering. It's a guideline, it's information. But once you review those legal documents, that's your official offering. You sign those documents, and then you're ready to wire funds. And of course, we encourage everybody to share those documents with their CPAs or real estate attorneys to review if it fits your criteria and whatnot. But the reason you would invest in a fund is because it gives you diversification over multiple assets. And especially if you're starting, it's a great way to get into it because you get a chance to see how all these different apartment complexes are run. And in this example, we use Class A assets. So these are assets that have, in most cases, solid surface countertops. They've got beautiful build-outs, Zen gardens on the roofs, infinity pools, gyms. You're going to have common areas for barbecues, usually on one of the terraces up top on one of the floors. You're going to have bike areas for people to lock their bikes, dog washing stations, sometimes restaurants or coffee shops down in the lobbies. They'll be mixed use. So you'll have retail at the bottom, and then you'll have residential or even retail, office, and residential. And they'll range anywhere from 6 stories to 15 stories. These assets will be anywhere from $30 million to $100 million projects. This podcast is sponsored by Sterling Rhino Capital. Are you sick of the stock market volatility and looking for something more stable and less emotional to invest in? Have you always wanted to be a real estate investor, but don't have the time or desire to be a landlord? Do you want to build a portfolio of commercial real estate assets that grow your net worth and increase your income without having to trade your time for it? Sterling Rhino Capital provides opportunities to everyday hardworking people just like you to invest in private placement commercial real estate assets that make all of this possible. Become a partner and join the Sterling Rhino Capital Investor Club to get access to these exclusive deals. Text the word Rhino, RHINO, to 66866 to find out more. And so by investing in this fund, you're investing in multiple assets across different markets in downtown Denver and in Phoenix, Arizona, which are 2 of the hottest markets for growth, migration, average household income. A lot of corporations are going there. They're just exploding. Perfect for this asset class because the average household income is much higher in those markets as well. As these corporations come to market, there's such a shortage of housing. Why would someone invest in a single asset? Well, maybe that's all they have access to, right? They don't have access to a fund that allows them to get into multifamily investing across different assets like this. For example, if you don't have the status of income or net worth to get access to all the deals that are available, then you may be limited, which is why this is kind of unique, because it's rare that you see a fund with a bunch of Class A assets in it where you can get in as low as $5,000, especially when you don't meet that $1 million net worth or $200,000 to $300,000 in income across a single individual or you and your spouse over a 2 to 3 year period. It can be difficult to find the opportunities. So that's a reason why you might invest in a fund like this versus investing in an individual asset. An individual asset may be coming your way a little more often than a fund like this. And maybe that's why you might invest in an individual asset. Maybe perhaps you like that particular asset, market, class of asset, Class C, Class B, Class A. Those are all determined by the amount of income that they bring in per unit or the amenities that they carry, sometimes the neighborhoods they're in. But maybe the neighborhood is close to where you live and you feel more comfortable investing that way. There are a lot of reasons somebody might invest directly in an asset, but we have found that there's far more diversification and security going into an asset that actually holds 6 different complexes. And that's why we love this equity multiple fund. And the fund return structure in here is a 3.5 times to 4.5 times equity multiple. So let's just use an example of $100,000. $100,000 could potentially be worth $350,000 to $450,000 in 5 to 7 years down the road. And you'll share in an 8% preferred return. So you get that 8% preferred return or cash flow that's available, which is nice if you're looking for cash flow, right? Passive cash flow. It's a great way to create that. And then you're also going to get depreciation. So you get a little bit of tax write-off. Generally, of course, you want to talk to your CPA. We're not financial advisors by any means, but you get to take advantage of that as well in this fund across all those assets. So this is a great way to grow your wealth. There's no doubt about it. The real estate outperforms the stock market all day long, especially when you look at the 100-year averages. And it's a great way for you to diversify your investment portfolio. So if you're interested, review all those documents, take a look at them with your CPA if you like, and then you wire your funds, you're ready to go. I hope this has been helpful, and please reach out if you have any questions.
Thank you for listening to another inspiring episode of Charging Forward. We hope you enjoyed your time with us. To access today's show notes and other resources, head over to chargingforwardpodcast.com. Start building a better future for your professional ventures and step into your financial freedom. Join us again next time here on Charging Forward.